When should you sell insider stock trades? This is a question I get all the time. If you bought a stock because you saw an insider buying it, how long should you hold for and when should you sell? Well, as with everything in investing, the answer is it depends. But looking at the data that we have, we can see that insider sales tend to have a longer signal than insider buys. The highest signal for insider sales tends to be in that 3-month to 1 year range, whereas insider purchases are shorter than that. My hunch for why this is because the market tends to go up on average, right? Those indexes just kind of forever keep going up and up and up. Whereas individual stocks, if an insider is selling, for example, that stock is going to underperform, stay flat, maybe go down, or go up less than the market. So over time, the market keeps going up and up, higher and higher, whereas that stock will stay much lower. And then so that delta and that gap starts to increase over time. The second reason would be that the market tends to react to purchases much more than sales. There are very few investors that are paying much attention to insider selling versus insider buying, where there are quite a few funds and quite a few investors that will just buy stocks insiders are buying, which starts to push that price up a little bit quicker. However, we're not looking for just the average insider trade. We're trying to find those highest signal insider trades that correlate with better performance. We want the highest signal buys that correlate with outperformance and the highest signal sells that correlate with the lowest performance. So some things we have to remember when thinking about when we should sell. Number one, Section 16 forces insiders to give back profits they make on short-term trades. So if they buy a stock and then sell within 6 months, they have to give back all those profits. So right there, insiders aren't really going to be optimizing for just next 6-month returns because they can't even profit off it, at least on the buying side. Secondly, they do have blackout periods and they're not allowed to make trades when they have material non-public information. So right before earnings, they can't place trades. And then if they know of big, good or bad news that is coming soon, they also can't make trades. So both of these two things together should bias you toward longer holding periods. So for sales, it's normally a longer term bet. If you see unusual insider selling happening at a company, it's pretty safe to just avoid that company for the next, 3, 6, or 12 months, or at least until there's a big dip in the stock or you see something else like insider buying that might then bias you toward a more bullish stance. However, insider selling can get pretty tricky in the short term, especially in markets like we have today, where anything that Trump says can cause the market to turn on a dime. As we just saw with Powell at Jackson Hole on Friday, the market was struggling or pretty flat for the few days leading up to it. He makes some statements that are pretty bullish, and all of a sudden the market rockets up. So in these cases, when we have those external forces that can cause the market to change on a dime, you might need to reconsider your positioning whenever these big changes do occur. This is especially true when we're talking about those high beta stocks like Robinhood, Carvana, Palantir, Hims, etc. Even though we see a bunch of insiders selling at these companies, if the stock market is going to rip, those companies are going to rip even more, and there's nothing you can do about it, and it doesn't matter how much insider selling is happening. However, on the flip side, the insiders are telling you that these are prices they're willing to sell at. And when things turn around, it's probably going to be a rough go for those companies, but it's very hard to get that timing right. For purchases, it gets quite a bit tougher. Theoretically, we still want to have a longer term focus because of those things we mentioned before. However, the market does tend to price in insider purchase a little quicker, which is why we see a lot of that alpha happening in the shorter time periods. Because of this, as I mentioned many times before, you want to really have a theory for why the stock in the company itself is a good long-term buy outside of just the insider purchase. That should just be another signal to give you a little more confidence in the company. It shouldn't normally be the only signal you are using. And then when you have a specific thesis about a company, that will then dictate how long your holding period is. So some examples off the top of my head that I can think of both shorter term and longer term examples would be Resideo Technology, which we made a video about not too long ago, where we saw a director buying the stock just 2 weeks before earnings. Now that is getting really close to what is probably illegal behavior there, but when you see insider buying that close to earnings, it really de-risks earnings, as it's quite unlikely that insiders would buy stock knowing that earnings are going to be bad. So in that case, your thesis might actually just be very short term, and you say, hey, I think these earnings are going to be pretty good. Now, what ended up happening was just a few days later, some news came out that shot Resideo up about 14 or 15% in just 5 days. So in that case, if you had already bought the stock and your holding period was only going to be a couple weeks anyways, you probably best off just taking your profits at that point, or at least putting a stop loss underneath it so that if the stock comes back down, you're still going to keep some of those profits because it wasn't a long-term play anyway. What did end up happening was the stock did come all the way back down before earnings, And now you actually have another chance if you wanted to. Your thesis about earnings is still probably correct, and you could then make an earnings play, which is something I did. And so you buy the stock right before earnings, it went up about 5% after earnings, and then you sell out because, again, this whole thing was predicated on them buying the stock right before earnings and you basically betting earnings is probably going to be fine. However, CD&R Channel Holdings then continued to buy the stock after earnings, and the stock continued to go up, and that very clearly signals to me a much longer term play here, where they weren't just banking on earnings being good or whatever that news report was that came out. They might have known they were coming and they knew they were going to get a better price, but as they continue to buy, they're pushing up their average price, and it's clearly a longer term play now. I don't really know anything about the company, so I haven't participated in this longer term play, but this would be a case where you need to dive in and have an actual theory for why you think this company is going to perform well. A couple other examples of some short and long term plays would be Kratos Defense and Tilray. Both of these were in sectors that got huge tailwinds from the Trump administration. Trump administration is obviously very pro-defense, especially U.S. defense. So just throughout his presidency, you should probably have a pretty bullish tilt toward those defense sectors. And then in this case, we saw the CEO at Kratos making an unusual purchase in a defense stock. And so now your whole thesis becomes, well, Trump is very pro-American defense and the CEO at an American defense company is buying the stock. This is probably going to be a pretty good play over the long term. And then in this case, the stock pretty much immediately started going up and to the right. And then the CEO then bought again a couple months later, and the stock just continued going up and to the right. So again, we're already biased to the long term, and then we also are pro the American defense industry because of the Trump presidency. And then you have insider buying on top of all of that. So this is a strong long-term thesis. And then we saw the CEO buying again a few months later, averaging up, which is just another data point telling us that this is probably a long-term play. A similar situation would be Tilray, where again, the Trump administration has been floating deregulating the cannabis industry, and then you see buying at a cannabis company, and so you're like, okay, well, maybe some news is coming out about cannabis deregulation. I want to get in on that play. So again, in this case, you have the long-term backdrop of the Trump presidency probably being pro-cannabis, but you also have the potential shorter term of some news coming out of them deregulating, which would cause the stock to shoot up. And in that case, there's your catalyst. They deregulate, the stock shoots up. That's probably a good time to at least put a stop loss on or just sell the stock, since most of the gains are probably going to come from that catalyst. And another thing we can look at are all these insiders buying the dip at these healthcare companies like United Healthcare and Eli Lilly. These are very clearly long-term bets these are very clearly long-term plays where the insiders are trying to demonstrate confidence that these are just short-term blips. They're going to turn things around and the company is going to get back in the right direction, going up and to the right. So again, very long-term plays here. So in summary, you should always bias towards the longer term. With buys, it's harder because the stock tends to move quicker. So you need to be more confident in the company itself performance over the long term. For sales, the stocks just tend to struggle and struggle worse between 3 months and 1 year. So it's a safe bet to just kind of put those stocks to the side and say, I'll revisit later, either when the stock has fallen, when a year has passed, or when I see something bullish come out, like either a change in the overall markets or insider buying or whatever it might be. You can find all the top insider trades at CEOWatcher.com.